Ever wondered what the difference between revenue and profit is? Well, it's a bit like the difference between the wind in your sails and the distance you've actually traveled. Picture revenue as the wind. It's the total amount of money a business generates from its normal operations before any expenses are subtracted. You can think of it as the top line because it sits at the top of the income statement. Now, imagine profit as the distance traveled. It's the amount of money a business retains after all its expenses, taxes, and costs have been subtracted from its total revenue. It's often split up into three categories: gross profit, operating profit, and net profit. Gross profit is your revenue minus the cost of goods sold. Operating profit takes the gross profit and subtracts all operating expenses. Net profit, the final destination, takes into account all expenses, including taxes and interest, and subtracts them from total revenue. Revenue is vital, much like the wind for a sailboat. It reflects a company's ability to generate sales and attract customers. High revenue suggests strong market demand and effective sales strategies. For startups and growth-oriented companies, revenue growth can be a sign of market acceptance and scaling potential. But what about those industries where market share is critical? In these cases, revenue can be a more important indicator than profit, at least in the short term. Companies might invest heavily in growth, accepting lower profits or even losses to capture a larger market share. Now let's consider profit, our distance traveled. It's the ultimate measure of a company's financial health. It indicates not just the ability to generate sales, but to do so efficiently, controlling costs and maximizing value from operations. Profitability provides the resources for a company to invest in new opportunities, pay dividends to shareholders, reduce debt, or weather economic downturns. Without profit, a company cannot sustain its operations, regardless of its revenue. Profit margins also provide insight into a company's pricing strategy, cost management, and overall operational efficiency. However, just like the wind and distance traveled can vary based on the weather and the route, the importance of revenue versus profit can vary based on the industry, stage of the business, and specific business model. In conclusion, both revenue and profit are crucial. Revenue is necessary for survival, indicating the company's ability to sell, while profit reflects its efficiency and sustainability. A balanced focus that considers both the top and bottom lines is often the most prudent approach for long-term business success. Keen to learn more about how to navigate your business journey? Sign up for a workshop at joe.majordanconsultancy.com/workshop. It's time to set sail towards your business goals.